So a brief overview of the system within Bybit where you have limit, market and conditional offers to buy with. I'll just go through them very quickly because I know that there's so many tutorials out there. I just want to make a quick one because you don't want to go through so much boring information that people on these tutorials go through. So just very briefly, the difference that we've got here, we've got limit order. A limit order is where you decide that you want to go into an offer, you want to buy a certain amount, or go long or go short depending on where it is at the time. So if you think you have a fix on the market, so if I believe XRP is going to launch after it reaches 25 cent, I would write in here my order price, which would be 25 cent. Okay, I would also go long on that at that point. Now that's not going to kick in until the market price hits that area. When it hits that area, my trade will be executed. I will start going long automatically. So it's automated. I've set up a system here where I will go long, and I don't necessarily need to even be looking at it anymore. The good thing about that is once you decide that that's where you want to be, you can say I want to take profit at 25 cent and 0.5, so just a little bit. I'm not going to go crazy. And also you can put your stop loss in, so I could put my stop loss in at, I don't know, I'd probably say, if I was that confident about it, I would put it in at 24.95. I'd make a little loss on there. That is basically all how it works, and that is what it is. It's automated. If you have a fix on the market, if you're confident that if an area gets broken, it's going to have continuation, and you're not going to be around to press the trigger on it, you can automatically set up that trigger. That's what that is. Market order is what most of us would use all the time. We enter the trade manually through the market, and we decide, obviously the leverage and what we would use, but it's not automated at this point. This is manual. So the market price is the price which is dictated by the squiggly line here. So that market price there isn't that what that represents is the market price, the purple squiggle. So you're not buying it in at the candle body or the wick or this green line to say where the price is at the time. You're buying it in at this squiggly bit, which is the market price, and that is a general overview of the entire market using all exchanges. This is clearly Bybit's exchange, so their prices are going to be slightly different, ever so slightly, but different all the same. And when you're trading leverage, you want to be absolutely on point, and it's going to be different to the market price. But that's normal. That's completely normal across all exchanges of all forms. So you enter the market manually whether you go long or short. So that's what market is. And conditional is basically it's like a version of limit order. So you set your limit order up and the trigger price. So what the trigger price is an area where the order will only be placed when that gets there. So if I think 25 cents is going to get hit, and that will execute my trigger, I'll put 25 cent there, but then what I would need to do is have this just slightly above or below if you want to lose out on a bit, but the trigger price is going to say my order will be placed on the order books at this point. Now the way that it would generally work is the first come first serve. If you've put your order on the order books already through a limit order, it will be seen, but it won't be seen if you do a conditional limit order like this. The trigger price will then put your order on the order books, and it would mean that generally you would want to be a little bit higher, so I'd say 25.05 or something like that. There's already a point there. I don't know. I don't use this. So that's why it's like that. I'd put 25.05, so only ever so slightly above. Now that might not get filled because the trigger has taken place, and I've just put it in at a fraction higher. So basically, my order might just get missed off the order book. You don't necessarily have to have your order filled just because you've got it on the book. If it launches up so fast that everybody's orders gets filled, or the lower orders get filled, yours won't get filled. So it's a conditional order that's triggered by a certain price. So just to recap on that, because I probably wasn't explaining that great, the trigger allows your order to be put on the order book, so it's only seen at this point. If you were to do a limit order, which is very similar to this, you put only an order price in, and when it reaches that, you'll be on the order books from the second that you press long. Your order won't be placed until it hits that level. If you're conditional, you put a trigger in. If the trigger is hit, then your order gets placed on the books, which is why you would want to put a slightly higher price, ever so slightly higher price on there. If you're convinced that something's going to go up, your order will then likely get filled. But for most of us, we use the market price, and this is the main thing that I use. And I don't like entering leverage trades very often, but when I do, I like to feel as though I'm in control of it. I would never use a conditional offer. I might use a limit order sometimes, but this is the difference between all of these. Anyway, that is the basics of these three mechanisms, and that's how it works. It works the same on Binance, it works the same on most trading platforms, and that's how it works.